Hey guys, what's going on? This is Angel Samuel here coming at you with another video. Today's topic is going to be credit and the different ways you can use your credit to leverage, whether it's your business or whether it is your personal finance, whatever it is you want to use your credit for. Now I'm going to give you some big secrets, so you want to stick to the very end to get the major benefit from this video. Okay, so let's get right into it. So first off, as a expert in the real estate market, there's different criterias that different programs require you. Now, there's in California FHA, which requires you a 3.5% down payment to buy a home and requires a 620 FICO score for you to qualify for an FHA loan as well. Obviously, the higher your credit score is, the better the interest rate they can give you, which can make a big difference on your monthly payment in the long run. Okay, so even a point on difference of your interest rate can make a huge difference on your overall payment in the 30-year term or your 15-year, depending on what kind of loan you want to get to buy your home. Now, credit is used obviously for cars, but it's also used for businesses. A lot of companies use their credit cards to pay for the business expenses and take the benefits of using the points to be able to travel, to be able to do whatever it is they want to do with those points, whether it be to buy more products, to buy more inventory, etc., etc. But those points are very, high value. If you notice, there's a lot of people that have credit cards that use these credit cards to pay pretty much all their expenses, including their mortgage, and pay those credit cards right away. By doing so, you benefit by getting the value of the points, which gives you, again, the ability to be able to travel. I know so many people that travel on the cruises. I've traveled on cruises myself, and really that's the way you do it. You pay your expenses with your credit cards and pay those credit cards right away to take advantage of those points, and you will in no time start building points pretty quickly. And not only that, you also get good positive reporting on your report, since you're making your payments on time and you're not affecting your debt to income ratio for a long period of time. Your debt to income ratio, since I'm on topic, does have an effect on your credit rating. You can have several different credit cards, but if you have one credit card that's maxed out, that's going to have a negative effect on your credit rating. Now, some tips and pointers you can use to increase your credit score. Each line on your report is called a trade line. Those trade lines report to 3 credit bureaus, either Equifax, TransUnion, or Experian, or a combination of those 3. Those 3 might give you a different score, each one. Basically, banks, when you're trying to buy a house, they would go through the middle score to determine whether or not you qualify. And if that middle score is TransUnion, you want to make sure that TransUnion is the highest as possible. Another tip is that if you go out and qualify or apply for credit cards, you want to know what credit bureau that credit card uses, so that way you make sure that that point on that credit bureau is as high as possible, so that way you get qualified. Another point on the side, once you get qualified, what you want to do, or once you apply online, or however it is an application, what you want to do is, instead of waiting for them to accept or deny your application, you want to give them a call beforehand, be proactive, and get them to to approve your application, because if you entice them with letting them know that you have a couple projects you want to use your credit card for, whether it's a home project, etc., what they want to know is that you're going to spend the money, but you're going to be responsible enough to pay it back. Okay, so trade lines is what's going to build up your credit score. If you have too many negative trade lines, then what you need to do is really work on those trade lines by either removing them from your credit report, negotiating down a charge-off, or whatever it is you want to do. You never want to contact the credit collection company, because they really don't have a right in the states to collect from the consumer, since you never wrote or signed an agreement with them. Your agreement was with the credit card company, who generally, once a collection company is involved, has already paid the credit card company their amount, or whatever amount they negotiated for, and then they try to come and collect from you. Say if they bought the account at $100 and the account was worth $500, they'll buy it at $100 and they'll try to collect $200 from you, doubling their investment. Okay. Another pointer I would recommend is you get, to add trade lines, open secure line of credits at secure line of credits right at the credit unions. You have a credit union, or if you know anyone that actually is a member of a credit union, whether they're employed through the school, whether it's a military, whatever it is, they're pretty beneficial for you. They also do offer very low interest rates on real estate loans and on automobiles. You want to put in, say, if the credit line is $500, if you actually put in $1,000 on a $500 credit limit, then that's going to automatically boost your credit score up, since you're not going to have that 100% debt to income ratio on that card. Other things you can do is, and this is a big pointer and can save you thousands and thousands and thousands of dollars if you write this down. This is a secret I don't give away to pretty much anyone, but since you guys are on the show, I'm going to give it to you anyways. Trade lines, you can either buy them, or if you have a relative or a family member who has good credit, you can have them add you onto their good credit trade lines and their good history. Now, the bad part is that if they default on a payment or become delinquent, that's going to automatically affect your credit score as well, and it's going to go down or up depending on the history and the payments and the responsibility of that person. Now, you can buy trade lines through companies such as ours. I'm going to put the descriptions down below for this information. You can add trade lines by buying them as well. There's several entities or people who sell trade lines, and by buying them, they'll report on your report within 45 days, start increasing your score. Again, you need to know exactly what you want the trade line for. If you're trying to buy a house, you want to make sure you have enough trade lines. For that, you need to have the history of 2 years. If you're trying to buy a home, generally 2 years or above is what's considered good credit, or 1 year and above. But the more you have it, the more benefit you're going to get from it. Okay, guys, I know it's a lot of information. Credit it's not that complicated. It's a lot of run around and a lot of numbers, etc., etc. But really, there's ways to manage your credit to benefit not just you, but your family. Because could you imagine if you had this information in high school before you graduated, what you would be able to do with the leverage of credit? Share this information with your kids so that way they can know how to use credit the right way and not the wrong way. The wrong way is to pay for your bills and pay them on a monthly basis. In the long run, in the scenario where you're going to pay interest rates, you don't want to pay interest rates. The way you stop paying interest rates is by getting 0 interest rate credit cards, paying whatever it is you need to pay on a monthly basis, your expenses with your credit card, and pay that credit card off at the end of that month, every month, so that way as to avoid any interest rates. Now, I hope this information was helpful for you guys.